Hello friends, my name is Tope and I'll be showing you how to trade an harmonic pattern and other trade setups that could arise from these harmonic patterns. Here we have a butterfly pattern, an emerging butterfly pattern that I observed some days back, and I decided to trade the emerging pattern from this area down because this is the X, the A, the B, and the C. And you can always trade emerging patterns from C to D, but it has to be done with some knowledge because not all emerging patterns complete themselves. So I traded from C towards this point, and I'll tell you why. This is where the D point should have been, but it did not get to D. This pattern did not complete itself. I'll tell you why I knew it would not complete itself. Okay, we had a pin bar here. This is a pin bar here, an inverted hammer, and I put a sell stop below here. That's how I took this trade. I put a sell stop below here, and I put my stop loss above here. I put my stop loss above the A level, and my sell stop was below this inverted hammer, and price went down. As you can see, price went down. But whenever you are trading emerging patterns, you must have good use, you must make good use of your trend lines, of important trend lines on your chart. Now let me show you what I did here. I drew this line from the X point down to the B point, like that. That's one trend line. Then also let me show you another trend line that I observed that could be very important. I drew this from here, from the daily chart, can easily be seen. From this point to this point, we should know that trend lines are formed by at least two swings, swing lows or two swing highs, and I joined this swing low to this swing low up like that. I also had this one here from this swing low to this swing low. So I have about three trend lines currently. Now let's step back to the 4-hour chart to see exactly what happened. Price came down from C, approaching our D level, our D point, but had some interaction with trend lines here. And it is this interaction with trend lines that makes us to know if the pattern will complete itself or it will get invalidated. Now I'll show you why this pattern got invalidated before getting to the D point here. This trend line, okay, for an emerging pattern, for you to consider anything major on an emerging pattern, it should have at least two interactions with a trend line. Here you will see they had the first interaction with this trend line here and the second interaction here. That's how you know if a pattern, an emerging harmonic pattern, will be invalidated. Okay, let's see. So we traded down from this inverted hammer with a sell stop going towards the D point, but around this region we noticed some trend line interaction. Now let's see that closely. The first interaction here and the second interaction here. Now when we got this, you will also notice that we already had a bearish rejection pattern here. This is a bearish rejection pattern. Let's see if I can show that here. I'd like to show you exactly what I'm talking about. Good. This is the bearish rejection pattern, whereby the bears came down forcefully here, but the bulls took over and rejected the bear movement, and they closed towards the high of the bull. The bull candle must close towards the high. It's not far from the high. This is a bearish rejection pattern. I'll repeat it again. The bears came down strongly and the bulls took it back up. You see, the bears came down strongly, forming a long wick and closing above here, above and near the high. So that's a bearish rejection pattern. It's a very strong price action setup. Good, that's the pattern, a bearish rejection. So this gave us another long position. Instead of continuing with this short, this showed us already, this setup, this bearish rejection pattern here showed us that the butterfly, the emerging butterfly pattern was not going to complete itself, was not going to reach the D point. So we would have had our entry around this area, around this level. Let me see, around this level, let's say around the high. Let's assume around 140.28. So I took a long position around here, around 140.28 thereabout, and I went up with it. Most of the time, the price will always go back towards the C area, go back to test the C area, which is here. It came back, price moved, coming back to test the C area. We can see where it came back was around the C area. It got back to the C area and did a retracement back to our trend lines that we had already drawn. Make sure you don't erase trend lines, don't delete trend lines. They are very important. They help you understand what the trend is doing. And we got back here and we had a pin bar setup here. We can see this is a pin bar here, a bearish pin bar though, and other pins. We had other pins. This is a pin bar. This is a doji. These are indecision candles telling us that the sellers are losing steam and buyers could come up at any time. And since we already had a price action set up here, of course that gave us a long position. That's this long position you see here. It gave us a long position, and that's it. We took it up, and price also again came back down to test the trend line here. When price came back, you see it formed a bullish pin bar. This is a trend line bounce. This is a trend line bounce. It's a very important trend action, trend line interaction. It formed a bullish pin, and also this gave us another entry which we took immediately. And you see where the price is up, and in our forum, the Surefire live trade forum, the Surefire FX live trade forum, I already stated there that we should be expecting price to visit the 147.00 area. The 147.00 area. If you check it, that around this line, you will see that there is some sort of resistance. Okay, let's check the weekly chart. I think that's where we'll see that on the weekly chart. Right now, price is going high on the GBP JPY because there's very little or no resistance, and it's finding it very easy to ascend. Now see here, 147.00 area, and that's where we have certain resistances around here and support regions. We see them here. You can see them here. 147.00 here, a lot of a lot of price action interaction, a lot of price action behavior around this area. And so that's my next resistance, and so we're targeting 147.04. Currently we have about 360 pips on our first position, which we took earlier, and we have about 260 pips for the second position. I hope you understand this. I believe this video has explained how you can take emerging patterns, how you trade emerging patterns. We must understand, like I said earlier, that not every emerging pattern will complete itself. This, like in this example, this butterfly pattern, this emerging butterfly pattern did not complete itself. It did not reach the D level, but our trend line interaction showed us that it was not going to continue towards the D level, and so we took an opposite trade up with this bearish rejection pattern here, and also we took another trade here based on the pins, the indecision pins we were seeing here, the doji and the pin bar and so on. We took another trade here based on the trend line bounce too. We took a trade here, and also here trend line bounce too with this bullish pin. These are price action setups that you must embrace, and it took us up here and we are still going higher. Let's put this to practice, and I'm sure we'll be very good harmonic traders. Thank you very much.